This year, earlier last year, we launched the 100 million what this process will do is to really increase
as and when necessary. Present here, colleague ministers present here, the CEO and members of SMIDA, senior members of the World Bank, and distinguished ladies and gentlemen. Good morning. It is indeed a great honor and pleasure for me to have been invited by the World Bank to deliver this keynote address on the launch of the 2022 Sierra Leone Economic Update, for which I register my profound thanks and appreciation. Undoubtedly, the report provides highlights of our economic performance in 2021, and more importantly, identify slippages in certain areas of our economic performance and provide recommendations on how to improve the situation. The report also detailed the challenges facing the small and medium enterprises, SMEs in Sierra Leone, and also made recommendations on how to enhance the contribution of SMEs in our economic recovery drive. Ladies and gentlemen, on behalf of His Excellency the President, Dr. Julius Maada Bio, and the people of Sierra Leone, I would also like to express our appreciation for the financial and technical support the bank has been providing to Sierra Leone to complement our development efforts. In 2020, as part of efforts to help us fight the spread of COVID-19 and mitigate its impact on the population, the bank provided $100 million in budget support. As COVID-19 lingered, the bank also provided a budget support grant of $75 million in 2021 to bolster the fight against COVID-19 and support the delivery of basic services to the people of Sierra Leone. Such collaborative approach is what we, as a government, have adopted in our collective drive to reshape and transform this country for the good of all Sierra Leoneans. Prior to the outbreak of COVID-19 and other external shocks, our economy was moving in the right direction with positive growth rates. Real GDP growth recovered from the subdued growth of 3.5% in 2018 to 5.4% in 2019. This fiscal situation was also improving, and government focused on fiscal consolidation through domestic revenue mobilization and expenditure rationalization to create the fiscal space to support the livelihoods of our citizens. As a result, domestic revenue increased to 14.6% of GDP in 2019, after stagnating at 12.3% in 2016 and 2017. Also, government expenditures were contained, resulting in the reduction in the budget deficit to 3.1% of GDP from 7.8% of GDP in 2017. Inflationary pressures moderated while exports grew. Ladies and gentlemen, The current slippages in our macroeconomic performance are not necessarily due to poor economic and fiscal management, but the result of successive major external shocks, especially COVID-19, pandemic, and the more recent Russia-Ukraine war. The Ukraine war has aggravated the negative impact of COVID-19 pandemic on the country. The disruptions to economic activities by COVID-19 resulted in the contraction of the economy by 20% in 2020. As the economy started to recover from the devastation of COVID-19, 2021, the war in Ukraine in 2022. Stalling supply chain promotions, fertilizer, and other essential commodities. Ladies and gentlemen, given that our low-income people spend most of their income on food, implications for food security are far-reaching. On that note, government in place measures to protect the vulnerable population from the rising food and fixed employment partners. Government is also expanding the cash transfer program to reach additional 35,000 vulnerable persons, including those engaged in productive activities. Furthermore, as government has always recognized the critical role of SMEs in promoting inclusive growth through its potential to empower women and create jobs for youths, our manifestation to this commitment was the establishment of the Small Medium Enterprise Development Agency, SMEDA, and afterwards launched the Munafa Fund to complement other sources in improving access to finance. Government, and with the support of other partners, will continue to provide additional resources to fund additional beneficiaries in the near future. Likewise, in order to improve access to finance, government, through the Bank of Sierra Leone, will roll out the new online collateral registry and automate the Credit Reference Bureau. Ladies and gentlemen, as a reflection on all of these challenges, government will continue to implement sound economic policies, structural and sectoral reforms to boost the resilience of the economy. Government will refocus on the consolidation of public finances aimed at returning to a sustainable fiscal path and reduce debt exposures. These reforms will include improving domestic revenue mobilization by implementing an array of revenue enhancement measures, including the automation of tax processes through extensive engagement and training of taxpayers on the use of electronic cash register and integrated tax administration system. Intensify field audits of key sectors and explore opportunity for carbon financing in the medium term. Government is also rationalizing the granting of duty and tax waivers by adopting a duty and tax waiver policy. In addition, government will continue to adjust domestic fuel pump prices in line with movements in international oil prices to insulate the budget from volatility in the oil markets. At the same time, government will continue to implement strong public financial management reforms to improve the effectiveness and efficiency of public expenditures. Ladies and gentlemen, with these few remarks, I look forward to fruitful discussions of the report And finally, hope that the recommendations from the report and those that will be profiled by panelists today will certainly inform government policies going forward. I thank you, and God bless us all.
Thank you, Honorable, for the keynote address. Ladies and gentlemen, I would like now to call upon our colleague Onerium Cruz, who is connected online. He will be giving us a few remarks on behalf of the country director, who unfortunately is traveling at the moment and is unable to join us. After the remarks by Onerium Cruz, we will then have a presentation of the report by SLEU, our senior economist based in Washington, jointly with Kemo Mansale, a senior economist. So can you please connect us to Olerion? Olerion, over to you, please, with a few remarks.
Hi, Abdul, can you hear me? Abdul, can you hear me and see me or not?
I can hear you.
Excellent.
I can hear you. I can see you.
Excellent.
I hope the technology will allow the participants in the audience to hear you.
Okay, well, just let me know if you cannot hear me properly, and we'll try to sort it out. So let me start. Honorable Minister of Finance, Honorable Governor and Deputy Governors of the Bank of Sierra Leone, other ministries and other ministers and deputy ministers, financial secretary at the Ministry of Finance, partners from various government agencies, invited guests, ladies and gentlemen. As Abdul has already said, let me begin by conveying the CD's regrets. He's unable to join, but has asked me to deliver the following remarks on his behalf. On his behalf, therefore, I'm delighted to join the country manager in welcoming you to the launch of the 2022 Sierra Leone Economic Update. As you have heard, the update is an annual publication of the World Bank that presents recent economic development and prospects and discusses policy-relevant special topics. It's a very important publication in any year, but especially in this one, given the massive turmoil that the economies of the world have been facing since the onset of COVID. So how is Sierra Leone doing in this context? First, on the positive side, the economy has shown some significant resilience. After shrinking by 2% in 2020, it rebounded to 3.1% in 21. And this growth was relatively broad-based. Agriculture was the main contributor, but it's worth noting that manufacturing was the fastest growing subsector in this recovery. And that's thanks in part to the government, to the support that the government gave to SMEs through the Munafa Fund and to the special credit facility implemented by the central bank. However, and that's on the less positive side, that resilience of the economy has come at a clear cost for public finances, as you've heard the minister just say. Prior to COVID, Sierra Leone had done pretty well and managed to reduce the fiscal deficit to some 3.1% of GDP, I think, in 2019. But as you know, the trend was inverted in 2020, with shortfalls on the revenue side and higher than planned expenditures, which were compounded by the base effect of shrinking GDP. And as a result, public debt has become a very significant concern. It has reached 76.9% of GDP in 2021, which is one of the highest levels on the continent. And there also has been a shift in the composition of debt with increased reliance on domestic borrowing, which is problematic not only for the public sector because it's more expensive, but also for the private sector because public borrowing is driving the price of credit up for everyone, including private sector firms. And finally, I don't need to remind you that inflation is also a major issue. Price pressures were initially driven by the post-pandemic rebound in consumption, supply chain issues, but the war in Ukraine has added significant fuel to the fire. And now really the concern is that expectations may become unanchored, as in not driven by fundamentals, but by self-fulfilling processes. Now, ladies and gentlemen, what does that imply for policy? It implies that the authorities have very difficult trade-offs to navigate. And as the minister has said, I think very well, a lot of the issues that the country is facing are not born out of poor policy making, but out of external shocks. But nonetheless, policymakers still have to deal with these shocks, whether they created them or not. So first trade-off is the need to consolidate public finances and to stabilize debt while continuing to provide essential public services and assistance to those impacted by high inflation. The second is the need to tackle inflationary pressures without depressing the economy and making it even harder for the private sector to access the credit it needs. And the third is the need to be responsive to the urgent needs of the population without taking rash decisions that can have negative consequences in the long term. And moreover, the policymakers will have to navigate all of these challenges in the context of upcoming elections, which is always and everywhere a difficult thing. So one partial but important solution is for the state to do whatever it can do to unleash the jobs and wealth creating potential of the private sector. And this is the focus of the selected topic titled Leveraging SME Financing and Digitization for Inclusive Growth. In this chapter of the report, we argued that SMEs can be engines of economic growth and job creation, provided that the main constraints they face can be addressed, including limited access to finance, which comes consistently as a top constraint and is important because it links very much with the macro that we were discussing before, but also unreliable electricity, high taxes, and cumbersome customs and trade regulations. Honorable Minister, distinguished guests, in the report that we are presenting today, I hope you will find useful analysis and ideas as to how these challenges can be addressed. Let me close by recognizing the very, very strong collaboration the team has enjoyed with government officials during the preparation of this update, and really express the recognition of the World Bank for this collaboration. I would particularly like to thank the staff of the Ministry of Finance, the Bank of Sierra Leone, Stats SL, and the SME Development Agency. Final word to reiterate our readiness to support Sierra Leone every step of the way in this very difficult journey ahead. Thank you very much for your attention. Back to you, Abdul.
The senior economists who are behind the write-up and coordination of this report, Smriti and Kamal. They've worked very closely with all key partners involved. So over to you, Smriti.
Thank you. Thank you for that introduction. Good morning, everybody. It's a pleasure to be here. Thank you for joining us in this presentation today. A lot of what we wanted to say has somewhat already been covered in opening remarks, but nonetheless, I think it's useful to go over some of the details and perhaps dive a little bit deeper into some of those issues. So as Abdul already mentioned in the beginning, the economic update is an annual report that the bank produces here in Sierra Leone, which tries to look at three broad issues every year. So recent economic developments, outlook and risks, and policy priorities. In addition to that, we have a special topic. As you're aware by now, issues indeed on SMEs and leveraging SMEs financing and digitization for inclusive growth. This presentation right now is going to focus on the first part of the report, which is essentially on economic developments, outlook and risks and priorities. And that's also how we've organized ourselves today. So I'll be presenting the first section and then I'll pass over to my colleague Kemo for the remaining two. So recent economic developments. When we started, at the time of the report last year, we were essentially looking at a very steep contraction in 2020 on account of COVID, the mobility restrictions that were imposed, and the overall supply chain disruptions that ensued accordingly. In 2021, there was some good news. The economy started to recover from the pandemic as the mobility restrictions started to get eased, consumption demand started to recover, trade started to improve, and so on. So the economy rebounded by a 3.1% registered GDP growth, a very positive development. However, this momentum didn't last long. We're expecting there to be a slowdown in the momentum of growth. There's still going to be continued acceleration, but the momentum seems to be slowing down a bit in 2022 on account of the war in Ukraine. The war in Ukraine has introduced several uncertainties. The most direct channel has been through the change in commodity prices. And we will talk about that a little bit more in the coming slides. But as you can see, we're now expecting growth to be at about 3.9%. It may come down further, but this is already lower than the 5% that we were projecting at the end of 2021, before the war in Ukraine set off. So let's talk a little bit more about the drivers of that rebound and the risks that the war might present. So in 2021, when we try to decompose the growth of the economy, what we see is that agriculture was in fact the primary driver on supply side for growth, accounting for more than 48% of the 3.1% growth that we saw during the year. Following agriculture was, I say mining, production, and trade, but as you can see, trade was certainly a larger component. What happened in 2021, as most of you are aware, is that the tax dispute surrounding Marampa mines was resolved, which allowed for a resumption of mining exports, although production didn't quite take off on Marampa. So mining still contributed a positive amount on production, but majority of it came from the trade surrounding mining and the overall improvements in trade once the COVID restrictions were eased. But public administration also played an important role. And we're going to talk about this more in the coming slides and the risks that this has presented to public finances. But these were the primary drivers on the supply side for growth. In terms of the sectors that performed the best, manufacturing was actually the leading sector, registering the highest growth of 12.3% in 2021, followed by trade and tourism and public administration. Manufacturing has done very well for several reasons that we've discussed so far, in large part because of the support the authorities have provided in form of the Munafa Fund and the special credit facility and so on. But because it's a relatively small share of the pie, it did not contribute that much to overall growth. But it's still reassuring to see that it did register the highest level of growth during the year. When you look at the drivers on the demand side, we see a somewhat similar story, because what you see is recovery in areas that were compressed in 2020. So private consumption, with the mobility restrictions that were imposed, private consumption did take a hit. So a lot of that started to recover in 2021, and net exports. So like I already said, the resumption of exports of iron ores played a large role. Similarly for diamond exports, and overall that helped compress net exports still remains a negative contribution to the overall economy because imports continue to far exceed exports, but a smaller negative contribution. But a lot of the story was interrupted in 2022. And like I already mentioned, the war in Ukraine was a primary driver. But how did that affect the Sierra Leonean economy? The primary sort of channel of transmission was indeed through commodity prices. So the chart that you see here is global commodity prices. And as you can see, energy in particular was already trending up even before the war set off in Ukraine, as already mentioned before, in part because of the recovery in demand globally. But the war really ticked off the surge in global commodity prices. And that has presented many risks for Sierra Leone. The first and foremost is in the form of inflation. Domestic inflation has trended upwards sharply, which was controlled significantly in 2020, trended below 10%, and it seemed like the economy was on good track, but the war and the ensuing spike in commodity prices and the supply chain disruptions has not borne good news for inflation. Fiscal has also been impacted, not just on account of inflation directly, although the authorities have taken very positive steps by the fuel price liberalization, which has protected the fiscal to a large extent. But there have been other channels, in particular from the subsidies that are given to power producers in the country, and we'll talk more about that in a while as well. Then on the external front, the risks are fairly straightforward in terms of the current account being affected by an increase in import prices. Food and energy together account for more than half of the import basket of the country. And finally, all of these factors have certainly had a detrimental impact on growth. So let's start talking about inflation. Inflation has accelerated very sharply. A lot of that trend began before the war set off, in part because there was a recovery in demand and supply wasn't quite responding as rapidly, and headline inflation had already started to increase in mid-2021. Simultaneously, the exchange rate continued to depreciate, and this was for several factors, domestic and external. A lot of it was just the general appreciation of the dollar. So vis-a-vis the dollar, the Leone did start to depreciate, but there have also been domestic factors contributing to that. And essentially that further fed into inflation. As I said, food and fuel are important import components into the inflation basket, but there was a lot of imported inflation that was playing into the headline figure. One interesting piece of analysis that our team did while preparing this report is that inflation does indeed have a very detrimental impact on welfare. So this is a simulated exercise where we try to see what is the potential impact of a food price shock on poverty. And what we see is that a 5% increase in food prices in particular results in about a 1.4 percentage point increase in poverty. Now, this is a simulated exercise, so as you can imagine, there are lots of caveats attached to it, and the report details on them. I'm happy to elaborate more as needed, but it's clear that certain commodities in particular have a much higher detrimental impact on poverty. So, it's not just about the macro story, but a broader development story that is making us increasingly concerned. Monetary policy was indeed very responsive to the inflationary trends that the country was witnessing. As you can see, the monetary policy rate was changed several times. First, it was reduced significantly to support the economy in 2020 when COVID first set in. And eventually, it was also started to increase in about mid to late 2021 with a rise in inflation. But interest rates have also been extremely high. As you can see, the green line is the T-bills rate. And this will feed into some of the story that we'll come to later on the fiscal, but indeed interest rates have been very high and credit has not been able to recover. Despite the relatively responsive monetary policy, the transmission remains low, the markets are shallow, and the credit market is essentially dominated by credit to the government, and private sector credit does remain relatively subdued, and it's crowded out by the public sector. Fiscal consolidation. So even before the current situation of the war in Ukraine, just since the pandemic, there have been a lot of the gains that were made pre-pandemic on fiscal consolidation, and there were some. As you can see, by 2019, the deficit was close to 3% of GDP. A lot of those gains have been lost since the pandemic set in, and the situation has continued to deteriorate. The fiscal deficit increased in 2020, further in 2021, and we still expect it to remain elevated in 2022. I do understand there are probably some adjustments to the fiscal since the report was prepared, which was back in April, but nonetheless, we can see that there has been a significant deterioration. You can also see that this is despite an increase in both revenue. So they're both simultaneously increased, right? Revenues and expenditures. There has been significant improvement on revenues as well, which I think is noteworthy. Part of it in 2021 in particular was on account of some one-time gains on mining revenues, but I don't want that to cloud the efforts that the authorities have made in improving revenue collections through increased tax efforts, through reforms that have been introduced to improve the efficiency and automation of tax administration. But simultaneously, expenditures have also increased sharply, which is not borne well for the overall fiscal deficit. So the revenues, like I was saying, have indeed been increasing. And total revenues have benefited both from efforts domestically to improve own revenues, but also from the increased grants and aids that they've received from the development community. So revenues have been increasing, but it has benefited from two perspectives and not just one. And to the extent that the grants do not end up sustaining themselves in the future on account of the crisis support that they have received in recent years, total revenues will indeed be impacted. On the expenditure front, it's very important to note that committed expenditures are a large share of that pie. So wages and interest payments put together account for nearly half of all expenditures within the country. Now, this is the 3-year average, so we're not talking about the actual performance in any particular year, but it's a 3-year historical average just to show that, with notwithstanding which year we're talking about, the situation is worrisome. I think the story on interest payments brings me to the next slide, which is on the public debt burden, which has indeed risen in recent years. And I think the most worrying here is the sharp increase in debt service to revenue, which, excluding the rollover, which is considered implicit of T-bills, stands at about a fourth of total revenues. Now, that's a large drain on public finances and reduces the space that the government has to address other developmental needs. And the key point to note here would be that domestic debt, which is the expensive component of the total debt burden, is what has been contributing to this rise in debt service to revenue. So as you can see, the share of domestic debt has been increasing steadily since about 2016, but it has become significantly larger in recent years since the start of the exogenous shocks. And that is essentially what has contributed to the rise in debt service to revenue. The external debt is largely long-term and concessional, and hence easier to service. As you can see, the composition of public debt, multilateral external debt, which is the long-term concessional debt, is over 50% of total, and the domestic component is about 35 to 40%, of which about 8 to 10% is just on domestic arrears, which is again another significant risk. It's a fiscal risk to the budget, essentially, to the extent we're unable to manage our public finances in a timely way. The cash management is prudent. You would continue to accrue domestic arrears, which poses a significant fiscal risk. So public debt is indeed still assessed to be at high risk of debt distress, and is one of the more worrying factors about the Sierra Leone economy at this point. The last slide on recent developments is on the external accounts. So the external accounts are dominated by the trade deficit, the chronic trade deficit that the country runs. And this is essentially because despite the improvements that we have seen on exports, and you can see that there have been, particularly in 2021, with the resumption of iron ore exports, imports far outweigh the changes in exports, and imports have recovered since the downtrend in COVID, and the current account deficit has continued to widen. So in 2021, the current account deficit went to about 14% of GDP. This is closer to a longer term average of the deficit, but on account of the increased external aid that the authorities have received during the crisis, the support from the IMF and the bank and other development partners has meant that reserves have also built up and has provided a suitable cushion to the risks that the external accounts pose. But this is not a sustainable cushion, to say the least. And as you can see already, by 2022, the reserve cover in months of imports is expected to come down. With that, I think I'll pass on the mic to my colleague Camo to talk about outlook and risks. Thank you.
Good morning. Thank you, Smithy. That's good. Of course, Smithy mentioned here presenting the outlook and policy priorities. I think from this table, you can see the key takeaway here is that if you followed our last updates, that we've revised our growth forecast, basically because of what Smithy mentioned, the war in Ukraine and the existing lingering effects of COVID. Many of us think COVID has gone, but we know what is happening in China. And it also stresses the need to continue vaccination to ensure that we insulate ourselves from lingering COVID risks. So we've revised our forecast. I think Smithy talked about 2022. It was about 5%. That has been revised to 3.9. We still want to see the actual outcomes. Maybe it will be lower. So the issue of growth, this is what we are seeing now. That it's been revised to 3.9 from about 6%. And we expect some recovery, perhaps the current shocks from the Russia-Ukraine crisis may abate as we enter 2023. But what is really also worrying, of course, is the fiscal front. You see that deficits remain high, mainly because of rising inflationary risk from the COVID and also the need for additional spending to cushion the impact of these shocks. We all know what is happening with fuel prices have increased by over 80% since the beginning of the year. That is also affecting goods and service subsidy spending of the government. So overall, we expect fiscal deficit to come down to about 4.2 in 2023. We had initially estimated it to reach 2.9% in 2023. Of course, the debt burden remains high, still above 70% of GDP. And this has been really, as Smithy indicated, stemmed from the fiscal deficit, but also additional issues relating to public debts, which needs to be addressed. Countries at high risk of debt distress. And one of the issues, the additional issues, really was contraction of the economy. So, and then the recovery really continued to be challenged, as I've mentioned. So it may affect the debt outlook over the medium term. Of course, one way is to grow the economy. Faster GDP growth can help lower debt. Of course, I'll talk about that in the policy priority. Inflation, of course, I think Smithy talked about it also, how the war in Ukraine has amplified domestic inflationary risks. And of course, we believe inflation may be higher than what we initially forecasted. What you can see there, at the time of the reports, this is what we had, and we know that the end period inflation, even as at end April, has reached 23%. So inflation will be higher than what we have estimated. And not only from food price shocks, but non-food inflation is also increasing very fast. So before I talk about the risk, of course, external sector, which is the current account deficit, will be challenged. We expect the deficit to remain large at 13% of GDP. Sierra Leone had recorded some remarkable progress in reducing current account deficit. In 2020, it declined to an all-time low of 7% of GDP. But that was helped mainly by transfers from development partners, and that really helped lower the current account deficit. So I think the issue of sustainability regarding tangible areas that are sustained, not because we cannot talk about grants because or transfers. As we've seen even from the Ebola, sometimes there is that big bang withdrawal by donors, which affects also the current accounts in terms of official transfers. But I think one area that pushed this current account in 2020 was really the official transfer by development partners. And we've seen that it has increased in 2021, 13.7%, projected to increase further to 15%, but eventually decline to about 13%. So of course, the risks to the economy are really, we have categorized them in terms of the war in Ukraine, COVID, and other domestic risks. So of course, I think Smriti also touched about that for 2022. The war in Ukraine has been passed through to inflation. We're seeing higher inflation, both food and non-food inflation, and it's accelerating. Of course, we've seen that our growth forecasts have been revised because of this war in Ukraine and price shocks that are associated with it. Public finances also have been revised upwards. We initially expected deficit to decline to about 2.9%, but we now expect it to remain at 4% by 2023-24. Of course, the COVID I mentioned when I started that we know what is happening in China and the repeated lockdowns rather, and it remains a risk if vaccination is low. So, and that will affect the entire outlook of the economy if we get to that phase where we'll need additional lockdowns, and that will affect economic activity as we saw in 2020. So, I mean, there is need to really look at what new waves of the pandemic will cause the economy. So, I think it remains an issue that clouds our medium-term outlook. Because we all know what happened during the last election. Investors have adopted a wait-and-see attitude. Most people postponed investments because of the fear of the unknown. And so we're expecting that, of course, the risk-averse nature of investment that may happen this time around. So, and post-election violence is also another risk. Then consumer price inflation, of course, we talk about inflation, but I mean, other domestic risks to inflation exist and which must be tackled, especially on the food inflation front, given that the large proportion of our food basket, especially staples, are imported. We all know rice, wheat for bread, all of those products are imported. And that will really threaten and what is happening with fuel prices. We saw some initial protests in March when the prices were increased by 50%. The motor drivers union called for a strike. And if domestic inflation continues to go up, fuel prices, it may cause some social stability or social unrest issues. And of course, finally on the fiscal front, we need really to, as of course the both Aurelian and the Honorable Minister have said, while these are not really related to domestic policy issues, but there is need to also take policy measures to mitigate some of the risk affecting fiscal and we have, of course, when I come to the policy priorities, I'll talk more on what we think on that angle. Debt servicing cost, of course, is another issue, but I think we have some recommendations on those. So policy priorities. Of course, we know that during the pandemic, the government really ramped up its support to businesses and households, developed a quick action economic response program, and was able to roll out cash transfer to households and also supported businesses through the Munafa Fund and the DSL Special Credit Facility. But I think what we are seeing with this current shock necessitates the need to continue with that policy. And because we see that inflation is now very high, and it is even implying that the current war in Ukraine may have placed more burdens on the households, so which require additional support, especially the pass-through of fuel price increases to household budgets. And we think fuel price increases are also affecting even food inflation, because moving food from farm to markets requires transportation. And we did a study on fuel price liberalization and found out that really there's a pass-through of an increase in fuel prices, so food prices. So there is need to continue this well-targeted crisis support to households So that's very important. And of course, what was also done through the special credit facilities and Monarch Fund to support SMEs through additional targeted cash support is very important. That is continued. I think that COVID era support to SMEs needs to be maintained and if possible scaled up. But I think this is where the balance comes in. We are advocating COVID era support to households and businesses, but at the same time, there's need for prudent fiscal management to reduce the debt load. So I think striking that balance will be key for the authorities, navigating that balance between scaling up cash transfer to households, supporting businesses, while also adopting prudent expenditure management to reduce the deficit and lower public debts. If possible, the risk of debt distress also reduced. So I think, and there are several issues when you go through the main report, what we talked about, how the need to exchange high interest domestic debts with, low interest concessional financing. So perhaps I know that the authorities will use recommendations in detail. And of course, on arrears clearance, we know the authorities developed an arrears clearance strategy. But adherence to that strategy is key, but also preventing future accumulation of arrears is very important. And when this is one area when we talk about support to households and farms, even eliminating arrears and ensuring that do not build up arrears can cushion the impact on farms. Most of these arrears are owed to agrarian farms in the private sector. So one way to really support the private sector is to really ensure that we do not have arrears and really reduce the burden on arrears on private sector. Finally, monetary policy. Of course, we know that Smriti showed in the presentation where the BSL has acted really to help the economy recover in 2021. But now that the economy is facing increased risk from inflation, the BSL has started tightening. And we saw even in March where there was a 75 basis point increase. So I think the most important thing for the BSL now to consider is the bank tightening too fast, given that the risk from COVID and Russia and Ukraine is already hurting the economy. Perhaps, but it's not only for the BSL, even for the Federal Reserve and other banks, it's issues to consider. How you strike a balance between monetary policy and the increased shocks that is coming from the war in Ukraine already on the real sector. Whether for that tightening of the monetary policy will not also really pull back recovery. So I think that's all. Thank you very much. I encourage you to look at the report.
Thank you so much, Smriti and Kemo, for an excellent presentation on the recent economic developments and the outlook. We'll now move to the second part of the presentation that will look at the special topic. As I mentioned earlier in the opening remarks, our special topic for this year is focused on SMEs. And I gave a reason why we chose SMEs, for the simple reasons they are so important to the economic recovery, being key drivers of livelihoods in our day-to-day lives. But before I call upon my colleagues to talk about leveraging SMEs for inclusive growth, the role of finance and digitalization, I wanted just to add a couple of points to what Smriti and Kemo presented here in terms of really how are we trying to work, support the government with their development partners in mitigating the impacts of some of the shocks. For example, on domestic debt, we are currently exploring options by learning what other countries in the world have done to tackle similar situations when domestic debt becomes an issue. And we have quite interesting examples. We'll be following up the conversation with our partners, the IMF and other colleagues, on what profiling the domestic debt or other creative means through which to manage domestic debt will be tackled. The other issue is on the food insecurity front. The bank is currently working on a crisis response window through which Sierra Leone will be a beneficiary. And we just finished negotiating a project of $60 million that will support food resilience in Sierra Leone. Again, that's in a way of trying to see that in future we do anticipate and mitigate situations that are brought about by shocks due to rises in global food prices for which Sierra Leone has very limited control. The other also area we're looking at is presentation. We have their presentation. So she can hear us.
Hi, can everyone hear me?
Hi, Shireen. I can hear you, but I don't hear the room.
Okay, I've just gotten the signal to get started. I think we're having technical difficulties, but I think everyone in the room can hear me. Hopefully you can see me as well. My name is Shireen Aravanchi. I'm a senior financial sector specialist at the World Bank on the Financial Inclusion, Access, and Infrastructure Global Team. And I'll be presenting along with the rest of the team who Arpita Sarkar, my co-author, and our colleagues focused on Sierra Leone, Moses Kiribiji and Siegfried Zoltel. First, I'd just like to say thank you all for your patience with these technical difficulties. I know these hybrid events are our new normal, so I appreciate your forbearance. I would have loved to be in Freetown today, and I think all of the attendees, the Honorable Minister, the Honorable Deputy Minister, the Honorable Governor, for your attention to this really important agenda. So let's go ahead and get started in the interest of time. Next slide, please. Oh, okay. I'm being told to hold, so I'll just hold until my signal. Okay, great. I'm told that you can all see the slides now. So we're ready to move forward, if you can all hear me. Great. Okay, wonderful. So for today's agenda, of course, we have a rich report for you to read. So we'll be doing just highlights today. I'm going to let you know how we undertook this report, give you a brief overview of what we found on SMEs in Sierra Leone. Of course, focusing in on the SME access to finance. Oh, okay. Sorry, Sweetie, would you like me to review my earlier remarks? Were you able to hear our introduction?
She wants you to start from the beginning.
Okay, all right. So just to recap, on the introduction side, my name is Shireen Aravanchi. I'm a senior financial sector specialist based in Washington, D.C. So good morning to all. It's a beautiful day in Washington. I hope it is one in Freetown as well. I'm on the Global Financial Inclusion, Access, and Infrastructure team, so focusing on issues like these, on SME finance, on financial inclusion more broadly. I'm accompanied by my co-author, Arpita Sarkar, in today's presentation, as well as my colleagues, Moses and Siegfried, who will be introducing a little bit more on our work that will help advance our SME access to finance agenda. And as I mentioned before, I'd like to thank all of our honorable attendees, the Ministry of Finance. I really enjoyed your remarks. The Deputy Minister of Finance, the Honorable Governor of the Central Bank. It's a pleasure to be with you all today. I'll be I'll be covering, as you can see on our agenda, a little of the high level findings, because of course we have an extensive report for you to read when you have a moment. But for today's agenda, I'll be reviewing some of the sort of key findings, some of the main highlights. As you can see on your screen in the room, I'll be giving you a little bit of some background on how we undertook this, some high level points on our findings on what SMEs look like in Sierra Leone, are the key challenges faced on access to finance, what we view as the role of digital finance, digital financial services, we call DFS, digitization, and some of the main findings on the challenges in SME access to finance. Lastly, followed by our key recommendations, or some of the focused recommendations, and how that corresponds to our ongoing work in this area. Next slide, please. I'm still seeing the agenda slide. Oh, thank you. Great. So looking at this landscape review. Next slide. So what we did for this review is that we combined desk research and certain approaches and principles. So we follow, when we think about SME access to finance, we follow the G20 OECD high-level principles for SME finance as a framework. So we think about the binding constraints of supply and demand side. Of course, for this special feature, we were looking also at the digital landscape. And as you may be aware, there was a digital economy diagnostic undertaken 2 years ago. So we were able to utilize some of the findings from that digital economy, not replicate efforts, but of course update for our current post-COVID environment. We focused on some of the existing demand side surveys that we're already undertaken in Sierra Leone, including the Excellent Enterprise Survey, as well as the DSTI UN survey that was undertaken not so long ago, and looking at the supply side information, seeing what was available on the market, what are the financing options available to SMEs, and then looking at the underlying infrastructure. So how are payment systems, credit reporting, secure transactions, frameworks exist to enable SME access to finance. Of course, a key element is public sector and private sector commitment. So what are the existing programs? How are they engaging the sector to enable SME finance? And of course, one thing to bear in mind is that some of you may have met with me previously as part of our recent SME access to finance financial sector assessment program. Of course, that is an exercise that we often undertake with the IMF, looking at both stability questions and development opportunities. So you may find some of the publicly available findings from that financial sector assessment program mission undertaken in February and March to be represented in the report. Not wanting to duplicate efforts and reconduct some of the same interviews, I leveraged our findings from that research into this report. But of course, not violating any confidentiality. Next slide, please. Right, so just to give a brief overview, so from our discussions with MEDA, from the reporting as well, we understand that MSMEs, of course, including micro, represent 90% of the private sector economy in Sierra Leone, with an estimated total of around 50,000. By and large, these are informal enterprises that are not registered by any of the business registration formats. They tend to exist in low value added activity areas. And things like light manufacturing, tourism, and trade. Of course, we've heard frequently that access to finance, unreliable electricity, tax rates, and cumbersome customs and trade regulations have been some of the key areas that they've mentioned as challenges to operating businesses. And we thought that, because of these constraints, we understand that digitization and DFS are our vision of providing a pathway for improving access to finance and inclusive growth among SMEs. Next slide. So, of course, we have all had a huge sea wave of change over the last 2.5 years since the COVID-19 pandemic hit us globally, and that has not escaped Sierra Leone and SMEs. We undertook business pulse surveys in 2020 and 2021. And from this, SMEs reported by and large a decline in sales, 88% of them did. And many have responded to this by closing operations, laying off staff, really, contracting in order to survive. 35% of SMEs reduced worker wages, and 25% had laid off workers. So although there have been many responses by the Sierra Leonean government and other actors, only 1% of firms reported receiving any credit support, tax reductions or exemptions, or wage subsidies. Of course, some did report receiving cash transfers, even if, and there might be some, overlap between an SME as a business versus an SME thinking of themselves as an individual, but that 3.6% did report receiving some. Of course, still, quite a low number. Next slide, please. All right, so some of the key challenges SMEs face in terms of, how they can attract financing is that many of them are informal. In addition to that informality in terms of their business practices and registrations, they don't necessarily have high degrees of financial and digital literacy or business readiness. Many SMEs, or what are considered SMEs, might not be business ventures. They might not be run by entrepreneurs. They might be wage substitution ventures. So someone might have gone into business really just to survive, not to think about growing their business and becoming, the next Elon Musk. They're trying just to find a livelihood venture. So because of that, they might not necessarily have the know-how or the ability to attract, to build up a business. In addition to that, and kind of contributing to that, is there are limited availability of financing instruments and external capital that are really tailored to SMEs, and a lack of access to infrastructure that might be, electricity or other types of infrastructure as well. Next slide, please. So now we're going to go into a little bit of, what we see as the role of digitization entering here. Arpita, over to you.
Thank you, Shireen, and good morning to everyone joining from DC and from Freetown. So digitization is a key enabler for increasing SME access to finance, both through new technologies and new business models that can make financing more accessible. And some of the key infrastructures to support this digitization are ICT infrastructure and financial infrastructure. And while Sierra Leone has made great inroads in the development of ICT infrastructure, reliable and affordable access to electricity to small businesses and affordable internet connectivity still remain key challenges, as was noted in the digital economy diagnostic exercise that was conducted in 2020. And in terms of payment infrastructure development, one of the key gaps is the need for a retail payment switch to facilitate interoperability. But I understand that this is expected to be operational soon with World Bank support, which will be covering a key gap in the financial infrastructure. And then on credit infrastructure, we have some detailed findings on credit infrastructure, especially the collateral registry, which will be discussed shortly when we discuss our key findings. Now, so digital financial services are growing in the country, but as of now, they're still restricted to mobile money, and the market is dominated by two major mobile money service providers in Sierra Leone. But ultimately, with improvements in infrastructure and with better adoption of technology, digital financial services should serve as a pathway for the use of more sophisticated digital products, including financing products, which can help SMEs, which we will be discussing in the next slide. But before I move to the next slide, I would like to quickly state that digital skills development and creating an enabling environment for mainstreaming of digital solutions are vital to the digital development agenda. And again, these are a focus of the World Bank's ongoing engagement with the government of Sierra Leone. But the idea is that these different pieces need to move together for broader digitization of the economy. Next slide, please. So now we're going to discuss how fintech and digital financing innovations can improve SME access to finance. There are some financing products that have existed historically in trade finance and supply chain financing, like factoring and reverse factoring. But the use of digital technologies has made them more accessible to smaller enterprises like SMEs, and it covers a key gap or a key barrier that SMEs often face, which is the lack of collateral and information asymmetry between the various parties involved. And then we also have secure revolving lines of credit or asset-based lending that has been used by more mature enterprises, but with more access to technology, it has become more accessible to SMEs in other developing countries, and this is a model that can be potentially replicated in Sierra Leone. Next slide, please. Okay, there are a few other fintech innovations, such as equity crowdfunding, electronic invoicing, digital payments, and P2P marketplace lending. These are, again, fintech solutions that address the problem of lack of collateral, high cost to serve relative to revenue, and information asymmetry. These can also help improve SME access to finance in Sierra Leone. Next slide, please. So now we will discuss the main findings. So Shireen, back to you.
Great, thank you, Arpita. So looking at what we have found to be the current status in Sierra Leone is that by and large, the products that exist for SMEs are shallow, expensive, very limited in terms of the appropriateness to SMEs. So although, one big limitation of our work is that there was limited data collected on SME finance. So we don't have existing data on the volume or number of loans by segment from commercial banks. Of course, they hold 93% of financial sector assets, but as we heard before in the earlier discussion, they by and large aren't necessarily undertaking significant intermediation. So SMEs as a segment, we don't truly know what percentage of bank loan portfolios are going to SMEs, but we have all signs that it's very, very limited and low. And the distribution between micro, small, medium is not clear. We don't have that, but what we can understand is some of the demand side data reflecting that availability. So thinking about the enterprise survey, we see that firms with access to a bank loan or a credit line is really quite low, under 10%. And if you can see that against regional averages or comparator countries, that's very, very low. Of data that I've seen, it wasn't possible to know what percentage. From conversations I've had, a lot of times also the products that are available seem more suitable towards micro enterprises, just based on the timing and the methodology employed. So I'll go into that a little bit more. Next slide, please. Okay, so although interest rates aren't formally tracked, we don't have information, as I mentioned, on what the loan portfolios look like. We understand from conversations that the interest rates offered to SMEs range from 22 to 35% per annum, which is, of course, quite high. If you think about a business being able to generate enough money in profit, of 35% profit would be quite high in order to be able to finance that sort of interest rate. We also see that collateralization is really quite high, ranging from 150% to 350%. This is what, the 350% number is what has been cited by enterprises interviewed in the enterprise survey. Of course, this is driven by high perception of risk, but also, the requirement for collateralization is only 120% of market value. So that's reflected in a much more onerous requirement for SMEs to be able to put up that type of requirement, which is typically required in immovable property. So, and as I mentioned earlier, SMEs require a variety of financing products. If you look at the little, it might be too small for you to see, but it'll be larger in the report. We typically think of the range of financing needs and firm sizes as a continuum, where there might be a different available products and instruments to meet these needs, such as, whether from microfinancing all the way to capital markets to private equity. But generally speaking, plain vanilla loans are what's available. So not really any leasing, factoring, or, in terms of on the equity side, any VC or angel funding. We haven't seen any alternative financing available either in terms of, on the DFS side. Next slide. So, switching gears a little bit to talk about what we've seen in terms of some of the infrastructure developments. There's been a lot of great progress, and of course, we've heard about the exciting development to modernize the credit registry. The existing credit reference bureau is really quite limited by the heavy the heavy manual processing that it can require a significant amount of time. There's a lot of duplicate names, but credit information is one of the tools that we see as possible to increase the visibility of SMEs' potential creditworthiness. Being able to see, even if we don't have a lot of information on their financial books, on formalized financial reports, being able to see that they, have a great credit history is something that lower their perceived credit risk. In addition, of course, we have the exciting development of the new collateral registry that was launched last year, and there's been some uptick in reporting. But generally, as I mentioned before, collateral is frequently undervalued, and some of the reasons that is the case is because it's very inconsistent to enforce credit agreements. It's very difficult for financial institutions to seize collateral because it requires a court order. It seems that obtaining such a court order requires a lot of time. There aren't any out-of-court mechanisms available, so this renders asset recovery unpredictable. In addition to that, thinking about switching gears to movable collateral and making that as a more appealing option for financial institutions and SMEs being able to pledge movable collateral, such as equipment or even receivables. There are limited secondary markets that exist at this time. Next slide. Right, so in the interest of time, we're going to shift gears to some of our key recommendations. So the first one, just in order for us to more fully understand what the market looks like, and what SMEs look like, we want to be able to have more precise data. So right now, I mentioned earlier that there's thinking that there's an estimated 90% of the private sector is SMEs. Well, when we see that sort of number, that high percentage, what that means to us is that this might be too broad of a definition. And we might need to be a little bit more narrow in how we define SME or MSMEs in order to be able to understand and differentiate between which ones are wage substitution ventures, as I mentioned, or ones that are in fact capable of greater economic output, a bit greater growth, ones that provide jobs and can have subsequent greater contribution to the Sierra Leonean economy. You know, when we think of the reason why that's important to have that type of data is because we want to be able to tailor interventions according to an SME size. So what the needs of a micro enterprise are quite different from the needs of a medium-sized enterprise, and we should be able to match our interventions accordingly. You know, in addition to having data on access to finance, I mentioned that we don't necessarily have information on what the loan portfolios of financial institutions look like, how much they are serving SMEs. It's also good to have data to understand which sectors more precisely SMEs are present in, how to target them as well. So my suggestion would be to undertake a national exercise with both sides of stakeholders, including public and private sector, to develop a more uniform definition, because the ones that exist are not necessarily aligned. You know, the private sector might use different definitions. Financial institutions might use different definitions, so that this can be aligned and that more consistent data can be collected. Next slide. So we have an exciting new national financial inclusion strategy in Sierra Leone, and I understand SME finance to be an important pillar area. However, you know, as I mentioned earlier, there is a wide variety of micro, small, medium-sized enterprises that are captured under this wide net of MSME. And the existing public sector interventions might be casting maybe too wide a net. It's great if you want to reach micro enterprises for a specific goal, maybe more on the poverty reduction side. But if you want to be reaching for the economic development side and job growth creation, the focus needs to be a little bit different, more towards those growth SMEs. Similarly, you know, making sure that interventions are having their intended effect through consistent performance review and you know, public monitoring, public reporting is important to make sure that those interventions are meeting their expected goals. So, you know, also with COVID, there are opportunities for digitization, whether through payments processors, e-commerce platforms, that you can generate additional data on SME operations, lower that information asymmetry, let us understand to a greater degree the creditworthiness of SMEs, and thereby increase their bankability, reduce reliance on collateral. So thinking through opportunities to further digitize, improve their bankability. So SME finance, it is an embedded pillar of the NFIS, but improving coordination on public sector actions, having the private sector more involved to a greater degree, ensure that programs are more targeted, additional, monitored. And then, as I mentioned before, really making sure that your priorities are aligned. If you're targeting productive SMEs, wanting them to enable jobs, make sure that those programs are reaching those targeted SMEs. Next slide. So I mentioned some of the gaps that exist that are driving high collateral requirements. So in the absence of the ability to enforce credit agreements in an efficient way, and you know, having these great information asymmetries, it's inevitable and it's not unique to Sierra Leone that financial institutions fall back on established relationships. So they might you know, only lend to long-term clients. They might only lend to those, you know, who they can get specific, you know, community letters and support. And they might require very high collateral and short-term lending. So they have short-term loans that begin repayment immediately, that high amount of property required as collateral, which most SMEs don't hold a lot of property as assets, and this generates uneven outcomes. As I said, SMEs don't have a lot of property, so we want to move away from that. So increasing the reliable credit information through the modern credit reference bureau, and creating an enabling legal framework, so to collect alternative data. So we talked about the possibility of, as part of that modern credit registry, collecting a greater variety of data, including through, as I mentioned, through payment processors, seeing what the turnover of firms are. Next slide. The new collateral registry is very exciting, but without the supporting legal framework and review of court processes, it won't be a success. So we need to make sure that that credit agreements can be enforced. So undertaking a review of the commercial court enforcement process, it's meant to be a fast track court, seeing the degree to which maybe this can be further sensitized, how case efficiency can be improved would be a key action. And also there are still regulations to the Borrowers and Lenders Act that need to be undertaken to be designed to really provide more legal certainty on perfection issues. Next slide. So thinking through some of the recommendations on the digital economy side, Arpita, over to you.
Thank you, Shireen. So these are basically the recommendations that came out of the digital economy diagnostic exercise, and these are in 5 buckets: digital infrastructure, digital platforms, digital financial services, digital entrepreneurship, and digital skills. And I'm just going to highlight some of the key recommendations. So on inclusive digital economy, one key recommendation is to improve the management of the Universal Access Development Fund to increase access to ICT infrastructure for Sierra Leone. And under digital platform, the key recommendation is to create a trust environment in digital government, and also to initiate a comprehensive plan to modernize government services to citizens and businesses, because often digitization of government services is the first step to a larger digitization agenda. Next slide, please. Okay, and under digital financial services, a key recommendation is implementing the retail payment switch, which I understand is going to be operational later this year. And the other important steps are mapping of government payments, which from our experience in countries like Cote d'Ivoire, we've understood that these initiatives can be important in understanding a country's digital payments landscape. And concurrently with that, there's a need to digitize government cash transfers with an aim to digitize all government payments, because again, based on previous World Bank experience in other countries, government payments digitization is often the first step to overall digitization of the economy. And concurrently, there's a need to develop digital entrepreneurship and digital skills, including prioritizing investment readiness for entrepreneurs to lower transaction costs, to safeguard assets of digital entrepreneurs, to create a trust in the system, establish spaces to support innovation, and also integrate the use of digital technology in the delivery of education, including in teaching methods and curricula, so that they're all linked to digital skills. Next slide, please. Now we're going to briefly touch on some of the work that the FCI Global Practice has been doing in Sierra Leone. And I'm going to hand it over to my colleague, Moses.
Good morning, everybody. All protocol observed. As we finalize our presentation, we wanted to share with you what actually we're doing on the ground and what we plan to do. In terms of our active work, currently we're implementing a project working with the government, the Sierra Leone Economic Diversification Project. It's a $40 million project which we started implementation in 2020. And of course, last year, like all projects, was affected by COVID. The project is to increase investment in SME growth and entrepreneurship in non-mining productive sectors. Mining is not considered here. What are we doing? We are working on business environment and capacity building. We are working to establish the online business registration and licensing system, and also create a one-stop shop for business services where SMEs can enter into an office and have their businesses registered, work on water connection, on power connection, and any other information. Of course, the court registry we supported it has been mentioned more than once. And also we are working on the construction permit system to support the construction of buildings system such that it's online. And of course, we are working with, of course, Ministry of Finance, Ministry of Trade and Industry, Ministry of Tourism, and other agencies to find out their institutional support. In terms of direct work on SMEs and entrepreneurship, we are working on tourism destination, site development, tourism rebranding, and tourism marketing. Tourism is a hanging fruit which government requested us to provide support. And also we are going to work on SME solution centers to identify one place in Freetown and another part of the province to create an SME solution center where an SME can come in, whether they have computers or not, have access to computers, have access to offices, and be able to work on their business. And also, lastly, we have support to SMEs through grants, training, and incubators and accelerators. In this component, we are providing some grant to support some SMEs take off from the ground. Next slide, please. What are our planned work? We've just finished a study on identifying new market opportunities for recovery. And what do we put on the table? Light manufacturing and exports, value addition in agriculture. It's key in terms of creating more jobs in the economy, to create more factories and more industries. The other area we zeroed in is the area of horticulture exports, fruits, vegetables, and of course, flowers. This is important. We think that there's a need to develop cold storage from the farm to the airport or to the port. And this is also a low-hanging fruit. And even the fruits can be exported when they are dry. Of course, we've mentioned tourism tapping on new markets. And of course, to do all this, we need human energy and human resource development. And then working with the EU support, the European Union, we are trying to study the trade finance and working capital. And we've been scoping the factoring and warehousing receipt system to find out the best way for SMEs to access finance, because throughout this presentation, access to finance has been mentioned as one of the biggest bottlenecks. And working with the EU, want to find out how we can provide trade finance, identify the gaps, and try to address those gaps, plus working capital. And of course, the other key thing has been the lack of business development services in the country. Last week, we held a training of BDS service providers, again with the support of the EU. So that is what we plan to work, and we are looking forward to work with the government to be able to develop SMEs and create more jobs in the economy. Thank you. Back to Atipa.
Thank you, Moses. Next slide, please. I believe our colleague Siegfried will now touch on some of the financial inclusion work. Oh,
it's the last slide.
It's the last slide, yes.
That one. Siegfried, over to you.
Perfect. Thank you so much. Can you hear me?
Yes, we can hear you. Go ahead.
Yes.
Okay, perfect. So good morning, everyone, Honorable Minister and Governor and other distinguished guests. So my name is Siegfried Zottl, and I'm working in financial sector issues in Sierra Leone. And we heard about a lot of challenges SMEs are facing in the country when it comes to access to finance and financial inclusion. So one of the important programs which are in the pipeline is the Sierra Leone Financial Inclusion Phase 2 project, which is trying to address some of these challenges. And so the overarching objective of that project is to actually increase financial inclusion, not only of SMEs, but also individuals and households. And it focuses on two major components. So one is mainly on the adoption and usage of transactional accounts and digital financial services, which is usually the stepping stone for broader financial inclusion. And that has three subcomponents, which we are supporting. One focuses mainly on the expansion of financial access points, because most access points are concentrated in Freetown and not so much in rural areas. So we want to support the expansion of access points into remote and rural areas, including through POS devices, mobile wallets, and other access points. So it will facilitate digital payments in the country. We also heard about needs to develop or further develop the payment systems infrastructure. One payment systems infrastructure element is the national switch, which is supported under the ongoing project and which is expected to go live soon. But there are also other elements of the payment infrastructure which may require further enhancements, including potential upgrades of RTGS and ACH systems. And then we also want to support legal and regulatory enablers and put in place a legal regulatory framework which is supportive of digital financial services, and also support programs which help to increase financial literacy of individuals, but also of SMEs in the country. And then the second component is focusing in particular on increasing access to credit for micro, small, and medium-sized enterprises. And this is being done through, first of all, liquidity support and a line of credit to competitively selected financial institutions, which can then on-lend at market rates that liquidity to SMEs in the country. And this is accompanied by technical assistance to financial institutions to help them increase efficiency of their operations, but also to develop new financial products and services and innovative products, for instance, which do not rely on traditional forms of collateral, but may substitute collateral requirements with business cash flow information, just to give an example. Another intervention area we are supporting is to increase supervisory capacity of financial sector regulators in the country. And last but not least, also to help upgrade and establish a modern credit reference bureau system, which will help financial institutions in the country with assessing the risk profile of SMEs and credit underwriting, which, as we heard before in the presentation from Apita and Sharon, is one of the key constraints when it comes to access to finance. So that's just a very brief overview of the planned work addressing some of these key challenges we heard about. And with that said, I think we're coming to the end of our presentation and would like to thank you for your attention. Thank you.
Good morning, everyone. Thank you for the presentations, and I'm sure we have a lot to think about and how we work together to help Sierra Leone recover. So for today's discussion, the bank has invited a really important panelists from the government side. You've seen we have recommendations on monetary policy and also how we can work on the public financial management and fiscal policy. So in light of that, we have the Deputy Governor of the Bank of Sierra Leone as one of our panelists. And we also have the Deputy Minister One for the Ministry of Finance, Mr. Shepherd. So we have fiscal and monetary policy. But then one of the goals for recovery, as the reports focused on, is SME development and also how we leverage innovation and tech. So in light of that, we have the head of SMIDA, Mr. Sheikh Sano, to help us on this panel as the representative for the private sector. And we also have Mr. Mahmoud Idris, the CEO of Smart Systems, to speak more around innovation for SME development. And as the country manager has asked, we have a fixed amount of time, so we'll be allocating about 3 minutes per question, and I'll be typing, and if I tap the mic, that means your time is up. So we'll just jump right in. So, Governor, just when the economy started to recover, Ukraine was started, and we have new disruptions, especially around higher food and fuel prices and the pass-through effect on commodity prices for everyone. What is the central bank doing to cushion the impact of high inflation on businesses and households?
Well, thank you very much. Well, it's a very challenging time to be a central bank. But everywhere, I expect vehicles from you because inflation is beginning to run away from us. But I hope we continue. I mean, I think the most interesting statistics I had about this morning is people trying to compare current inflationary trends with what happened in the 1970s. We're still about 5 percentage points. The UK anyway below 1979 level, almost 7 to 10 percentage points below the 1974. So I am very hopeful that we'll be able to try and tame this beast. But we're in a very difficult situation right now. Mr. Mansari suggested that, yes, we tightened policy in our previous policy round. We're meeting next week. We're obviously very conscious of the fact that, we're tightening policy, we are constraining growth in a way. Having said that, and then there's a member of the Monetary Policy Committee smiling at me as I speak, Mr. Bangra, the chief economist, not part of the discussion. Look, we know what is going on. We have to deal with it. We believe we've signaled enough, but we have to keep our eyes on these two variables and make the best judgment there is to be made for this economy. But at a practical level, we've done quite a lot as a central bank. In fact, since COVID, our intervention has been the linchpin really for addressing the consequences of the crisis and making us grow again. Unfortunately, the war came, the war has brought its consequences, we're bearing the brunt of it. So we did introduce the facility to ensure that we could import, let's say, essential commodities. We manage that. We've been doing that, but even that in itself is insufficient. There has to be other actions. The Minister of Finance is in the room. Well, Minister of Trade should be here. Minister of Agriculture should be here. We should produce more. We should reduce our import bill. To reduce our import bill, be able to address this big challenge and peculiar challenge for generating forex all the time. It's really the answer to most of it. And not just, producing from zero. It's not just agriculture, but we should also think about industrialization and how our industries, people level, I know you're coming in 3 minutes, but then when I'm asked by the financial sector, what do you think will change this economy? Like you telling me, industrialization was a young student in the 80s in Sierra Leone. I did my dissertation on Wellington industry, studying capital budgeting practice of manufacturing in Sierra Leone. There was 20, 30 of them there. Recently, I went to the opening of APP down instead of there. Instead of there is an industry. There's lots of stuff going there. So we should try and rebound, resuscitate these big industries that have, dwindled over the years. I'm talking 30 years ago, but that's one of the key to solving some of the challenges that we have now, being heavily dependent on importation. Let me take back that for now.
Thank you so much, Governor. Honorable Minister, Governor has alluded to strong policy stance and the need for industrialization. And we know at the Ministry of Finance, we've been really prudent in our public financial management. Up to 2019, deficit was 3.1% of GDP. But then due to COVID, it's risen to 5.9% in 2021, reflecting a combination of higher expenditures, revenue shortfalls, and the deferrals we did in response to COVID-19. So we're still in the recovery phase. What would be our ongoing efforts to help us improve on reduce fiscal deficits and improve on stability in the economy?
So thank you very much. I want to thank the bank for, I think, a very well-written report and all those who contributed to providing the data, but also some of the reasons underpinning what are the key findings. Certainly, the fiscal is the foundational piece of ensuring that you keep the macro on track. Macro stability, it emanates from the government's own requirements in the state. And what you do there is to have a right balance in between the expenditure pressures we currently face, that's the real ones, but also how you pursue revenue policies that can ensure that you create a space to be able to carry out those needed spending. And in the presentations that we have made here, or the findings from the report, the stresses from the expenditure side are predominantly coming from wages, but also of late, interest spending on predominantly domestic debt. I'll say there is external debt, but not necessarily the true problem. We have to manage those. Pressure is coming from domestic debt. But also, I think we've been seeing a lot of pressure from subsidies, and the subsidies are emanating from things we did not envision. That's the fall of Ukraine pressures that are coming out of fuel prices, predominantly for energy. So those are the pressures. Now, how do you create a space to be able to, and pressures we did not envisage actually, right at the beginning of the year, and I want to speak to this here. So what do? I mean, you try and ensure that you create a space on the revenue side. Revenue for the last few years, as you will imagine, as a result of COVID, we did a lot of reversals by creating what they call deferrals, tax policies. We became a little bit more softer to ensure that we can facilitate businesses to run very effectively. So what we do here now, the current circumstance, because we had a lot of shock this year on our revenue side, where I would say because of rising prices of fuel, which we know has got social implications, we went easy on excise on fuel, for example. Of course, there's a limit to how much you can give up that size of resources that are coming into the budget. And why I say so is because the composition of fuel usage in the economy is largely driven by both retail but also commercial users. And the commercial users that are accounting for a sizable portion of the fuel cost are coming from mining companies. The mining company is an enclave structure within the government. Their feedback is very weak, right? So you can actually insulate the general retail use of fuel, but ensure that the mining, who are actually predominantly just producing for export, those ones really do take on the brunt of it. So we're thinking through very deeply in the ministry on ensuring that we understand the dynamic very effectively and reverse or restore some of the exercises associated with fuel and plug in those resources into the budget, right? So that's one key area. But the other issues around efficiencies, which I think NRA has been trying to push. Efficiency on the part of ensuring that you deploy technology to harness effective GST tax collection. Of course, we've been receiving a lot of, I'll call it resistance from the market on doing this, but that's an area I think you really want to ensure that we expand a lot more resources. There are several other areas that we can do more going forward. We are toying through around excise generally, and ensuring that we use digital solutions on crime resources, whether by using effectively taxing maybe alcohol or cigarettes. These are called sin goods, and to be able to deploy more resources. Possible area of efficiency for deploying more resources into the system. We actually start our feet on duty waivers, right? Where I think there's a lot of discussion there, but with digital duty waiver systems now, we are limiting that and ensuring that the policy that we are introducing will reduce the discretion around waivers that are not statutory waivers that are given through international terms or agreements, but across sectors, we make sure that we rationalize that very effectively. Let me not stop there because I think I don't want to run too much of time. But these are generally the kind of issues we're actually pushing forward to ensure that we create space needed to meet some of the expenditure pressure that we have.
Thank you so much, Honorable Minister. And we've all seen how dynamic it is to manage the economy. There are different inputs, different considerations, different beneficiary groups that we need to consider their impact, and also ongoing research and studying the environment to see how we can make our policies adaptive to respond to the issues. And one of the things Minister alluded to is digitalization. So government is also forward thinking and working on ways to drive efficiency. We also spoke about how the crisis affected government and it also affected businesses. So, Mr. Mahmoud Idris, the report found that around 18% of SMEs reported a decline in sales during the pandemic and often closed operations and laid off staff. So even though we know that government also provided support to SMEs, to businesses in the tourism sector, on a whole, how did business actually go through the COVID pandemic? What challenges did they face and how were they able to manage them or deal with them?
Thank you. So two things as a general introduction. It's very interesting. Listen to macroeconomists and take high level aggregates that it is about trends, movement, percentages. The reality, though, of many who aggregate to form these statistics are real life experiences. So back in the day, during the war, there are these announcements like there has been an attack and thousands of people dead. Now, thousands of people is a statistic, but there are individual stories of people who went through horror to move to become a displaced person. When you talk about the 88%, etc., these are statistics, but they are real life experiences. So, SME
who are not at the level of international conglomerates and big business who we call the private sector. So they are who I like to call the forgotten middle. They're really very small. As you can see, the statistics also says that 90% of the private sector is there, and there is the rest of the 10%. Now, the people I will be talking about from an experience point of view are not really quite up there, but they are in between now. Not much known about them, but I can try to say. So coming to your question about how have they survived? I like to break it down in three. First is what I call adaptability, trying to adapt. The second is convention. How do you find a way to navigate the timing constraints that you face? And the third is what I call reincarnation. So adaptability, how do you survive if you're not a small guy doing 5 million loans a month revenue and you want to grow to be known as a real private sector? One of the adaptability measures has been finding, becoming opportunistic. There is a whole body of knowledge called entrepreneurship. Entrepreneurship came into the limelight as a result of private sector activities in South Africa and most recently in Nigeria, where particularly Black-owned or local businesses use political, private, and other connections and other non-market-based things to survive and make money, but not necessarily to deliver on the kind of good services, production, and productivity that will bring about private sector-led growth. So yes, people make money, but it's mostly leading towards rent-seeking as well as state capital. So one survival strategy for our local private sector that is not grassroots is going into the entrepreneurship industry. It is a growing industry and it's something to watch because then you can spend 50 million, 100 billion here and there. But if it's going into the entrepreneurship space, then impact and results cannot be seen. The second about circumvention is what we do. So circumvention is where there's revenue and there's cost. It's a profit, you survive. So two things you do. If you can't grow profits, revenue, cut costs. So people have to practice circumvention. Is there a way I can circumvent GST? Is there a way I can circumvent paying the full labor expenses? So can I avoid paying massive for my staff? Can I avoid paying other related expenses? So you go into informal labor contracts, you go into under-the-table arrangements as a way of bringing down costs, just so that we can survive. And then we have the reincarnation, which is going on, but not many people are paying attention. So reincarnation is basically a situation where I start a business, I run into trouble, probably tax liabilities, and many other things. So what I do, kill it, and go 6 months, take a break, and come back again with a new growth, start a new business with a new name. You don't necessarily want to be criminal, but it's a way to adapt to the challenges you're facing. So on your question, adapt. If you can circumvent, circumvent. If you can't circumvent, carry the whole.
So, Mr. Sano, you're here to help. Your work is around SLE development, and you heard from Mr. Idris how SLEs, the 3 strategies SLEs are using to survive and recover from the pandemic. And for you, you cover a lot more SMEs on your database than what's even with the OARG. So you have more than 50K that you know about than what the OARG, they have about 6,000 on their books. So given what the challenges are and how businesses are trying to use those to adapt, and we know that one of the key challenges SMEs face in Sierra Leone is access to finance. So what can governments do to facilitate more access to finance for SMEs, and what steps have been taken so far?
Thank you very much. Because that's become clear that SMEs are economic growth machines. Because they are capable of jobs, increasing productivity, they also contribute to economic growth. However, various challenges. Most area want to be for discussion is access to finance. How do we feel government help in that direction? From the presentation, one slide spoke about how the main commercial banks perceive SLE when it comes to risks of default. So they don't see them as liable business partners. Commercial banks, their motive is profit making. So in my view, it's for time that government start thinking about establishing development plans that caters for video and long-term finance the needs of the SME. Because most of the commercial banks only provide short-term financial needs. They are not consistent. So the establishment of development plans looks at public interest and provide medium, long-term financial needs for SMEs could be one of the big government can assist. Secondly, Sierra Leone lacks sector-specific SME products. All of the financial service providers use. I think it's for time the government through the Bank of Australia start thinking about how we can develop sector-specific SME loan products. Because
So we've seen that activities that SMEDA is undertaking to help SMEs develop and also challenges. So especially around access to finance. Governor, so SMEDA is proposing development of development banks and sector-specific financial products for SMEs. So what are your thoughts on this and how can you complement this with monetary policy? Because you supervise the financial sector, we're working towards financial sector deepening and also expanding access to financial services. So what's your response to the proposal from SMEDA and also how would monetary policy complement access to finance for SMEs?
Okay, well, thank you very much. Very general development finance institution, local development finance institution is a must. I believe Minister is right to me, that's the budget. And I believe discussions are ongoing, hopefully not slow. So it will come out that direction. You know, a good advice provide content about this specific needs. So, of course, sports that would always provide the necessary environment, make sure that we have adequate regulation, which is very important. You know, when you open up the space, you manage the space. Well, in terms of monetary policy contributing to generally, of course, hope and always when we take a decision on monetary policy, it should feed through the system and it should be reflective on what commercial banks will charge back. What commercial banks will charge their customers. We're a long way from an effective transmission mechanism, but it is improving gradually. We have a corridor system and going up, but going down very steep. So it's a challenge. We need to do more. Ministry of Finance ourselves, we need to introduce more securities in the market to create an atmosphere of choice, more choice. So, if, for example, the financial sector and I were just discussing medium dated, longer dated security, that's a good way to encourage and improve transmission mechanism monetary policy. Because with that variety, banks, options, then they'll stop going on. As he said, on every customer with one interest rate. So basically, it's a question of market deepening, but it has to be done both ways. On the formal side of the government, on the commercial bank side, we, as a central bank, are always encouraging to move away from the standard practice, holding 12-month movement security, and using that as the benchmark lending to customers. I think we need to move beyond that model. We're working with the banks to try to achieve that. There's one thing I wanted to mention very quickly about SLEU. I think it was mentioned in your presentation. I don't use the term SMEs and MSMEs anymore. I talk of growing businesses. Why is growing businesses? There is abundant literature that most businesses that contribute to economic development are businesses that do this transition actually grow into entities actually supports the economy. So if you're looking for a definition, World Bank, I advise you to use business.
Thank you so much, Governor. So we'll see that the bank and the Ministry of Finance is open to the development of a development bank, and also how the bank and commercial banks can work together to improve on transmission mechanisms. And one of the projects that the country manager mentioned was the national switch, and how it's going to help with digital financial inclusion and processing of financial transactions across businesses and for SMEs. So, Mr. Idris, role of the finance, what are the key constraints to harnessing this, and how can we work with, how can the government work to that in a position to fully leverage the offerings of digital financial inclusion?
So, digital finance and a lot of investments in finance. So, first of all, I think we are where we are, and there's progress, don't get me wrong. Because I think there is a lot to do to reach the people who need finance and the people giving the finance. And yes, technology can be a catalyst and a very strong enabler. Are there things we need to look at to make that work quick and better? Yes. Question is how. But let me explain. So you mentioned, for example, the work that the World Bank is doing in financing towards implementing the national switch. That is an infrastructure. Infrastructure is meant to provide a strong foundation for stuff to happen. So we have a building here. We can sit in here, rain ocean. It's we had in 2012. It's called the National Fiber Optic Project. That was a $30+ million project. Some of, like you said, the theory of change or the growth model was supposed to use access to broadband internet as a transformational form for individuals and businesses. But that presupposes that people need to have access we still have less than 2% of individuals and businesses connected to fiber optic, not those applications infrastructure, but beyond that, it gets everything from there to the last user. Over 98% is still using very expensive transmission means, which is why the cost of accessing broadband until recently was quite high compared to many parts of the world. The foundation I'm building is that investing in infrastructure is a necessary condition. But there is another thing which has to ensure that that's what I call the middleman, taking it to the last mile. Can't assume that implementing a national switch is a panacea and will solve the problems of access to digital finance. But again, 10 years down the line, we will find out only commercial banks, the same way they do with ACH, RTGS now, with probably 20% or thereabouts customer base, will effectively be using that switch. Every other person be using very expensive means of agent network development, etc., etc. And those transactions will be off that infrastructure or that principle I'm facing is that let us think of the middleman. Let us think of the people who are neither too small to consider, but they are not in the league of orange Africa. How do their thinking and their actions ensure that what you want to do in all of this infrastructure to promote PSS materializes? And I can tell you, there is a lot of ongoing work. think I still have one more question to answer later on. We talk about what can the government do. I think I'll provide some suggestions. But bottom line is two things. One, let's be ready to think outside the box, not assuming that what is being done is the end game. Second, let us give room to listen to what people are doing now that can complement this investment and effort and see how we can push those so that at the end of the day, we can use DFS for improving collateral system, improving credit reference system, improving, coming up with new and innovative products that will help to actually get the kind of credit that is needed. One statistic, one data point before I close. British Bank of Australia provided 100 billion euros, $10 billion agricultural sector to promote productivity and scaling up of rice production. Over a year later, 78 billion that is still with the Bank of Australia. So it goes to show that putting the money because we say access to finance, or bringing in the switch for people because we say access to infrastructure, it's not the end game. We need to be able to think beyond, outside of the box, talk to people who are doing stuff. How do we ensure that solutions, supply side solutions, meet the demand side requirement?
Honorable Minister, so lots of food for thought here for you, because your question is how, in the midst of headwinds from Ukraine, still responding to COVID, how can we drive inclusive growth? And Mr. Idris has made proposals around making sure whatever goods or whatever services we deliver, we make sure we think about uptake, and uptake not just at the elite level, but across the board to make sure our growth is inclusive. So from the Ministry of Finance, amid high crude oil prices, headwinds from the Ukraine crisis, what are we doing to overcome these challenges and work towards ensuring that we are on path towards inclusive growth?
Thank you very much for the explanations. I think in the presentation, there was a statement that the poor interventions are still relevant. For good measure of how you quality emphasize that the bank is being providing support to ensure that businesses have access to the resources required to make goods and services, or goods particularly essential commodities. All of this is all import. Like you said, we are not producing it. So that's where I actually grant. So our central bank is taking most of the ground to provide foreign exchange requirement on our businesses at the top form in the current environment. And the question is, how long will we be able to sustain this kind of stress and pressure? Okay, so we really need to think a little bit deeply about. So services like this for the under the current circumstance, you have to ensure that those goods you cannot afford not to make the essential goods that are available, rice, flour, oil in particular, or goods that we need to be able to bolster the economy. So that's one big issue. So the central bank has to be relevant in the current scheme of things. But beyond that, I think even our partners that are out there need to understand that the stress that we are facing is not extraordinary. They have been able to be concerned under the current circumstance, and we expect them to retool their engagement, especially for the bank, whether the fund or any other partners. I have a discussion with the African government. We are discussing issues around under the current circumstance. What do you do to bolster because we are actually stressed out? Well, what they said is under the unreplenishment scheme, which is 3 years in a row, they have actually received two shocks, they themselves. And so to the extent they've actually squeezed out whatever spaces they have become second. I think that's something we need to start thinking a little bit more detail. So that's one. But for us internally, the way we've been trying to recalibrate the budget and structure it for the different circumstances is to ensure that those issues that have to do with assurance statements, okay, those issues, we keep them on board. Focus, I think the report is very clear on those. How do you ensure that interventions in the education sector, those ones that are targeting school feeding, for example, those ones are maintained because they are increasing income pressures to families. How do you ensure that women, or vulnerable women who are supposed to be having free health care, service to drugs like whether they have parents like hospital. They have access to those under the current circumstances. How do you ensure that farmers that form more than 60% of the real base of the economy, they have access to the input required for them to do farming at the right time? Right now, farming is timely. If you miss it for this year, the growth impact can be very phenomenal. So those are the kind of interventions you need to do to be inclusive. But besides that, I think on the whole, on the fiscal front, the pressures that are coming in on the budget side for you to be able to ensure that holds that growth. You have to be deep thinking on really effectively managing debt and the strength that debt for you to create that space to be able to do those kind of investments. So we've been thinking very deeply in the Ministry of Finance and engaging with partners. How do we ensure that we school or we calibrate our debt profile needs? I mean, create other maturities and ensure that the interest costs have to be reduced in the budget. That discussion is ongoing, in my view. They are all ongoing, but also in time, included in the way you manage the basic fiscal by regularly ensuring that your cash requirements in the way they turn out to be, and the expeditions that are turning out to be very prudent or relevant at that point in time, you manage them very effectively. That's as long as we can, right? But they are there to take some of these precious memories of work. So that's basically how I think it is. But there are a lot of issues we've been thinking through, and I think even in the road sector, in the farming sector, definitely it's not only about providing inputs. But once these goods are grown, they're grown and they have actually produced. They got to get themselves to market. We have been doing some investments, basically trying to sort people to eat, don't have no other kind of society. We're being cash poor, extensively through balance support. And of course, we're investing in feeder roads. We restore into products into markets. As well, those interventions are happening. Those are the areas we're actually focusing on. Under the current circumstances, we to weather most of the storms that we have. But as the posture of the economy, it's not that easy. These are difficult times. The partners have to be on board with us. We've been in consultation with the IMF, for example. They gave us some SDR allocations. Now, what is that? What are they trying us to do? That basically to support the preference we have to provide these essential commodities, but also to ensure that in the Ministry of Finance on the fiscal side, we have access to these resources to be able to respond to what pressures that we have, especially on the vulnerable side of the budget approach. So that's where we are on most of this development, but it's not that easy. We have to produce, right? And I think there's about the discussion we have to produce. We have to promote the economy diversified and vertically diversified, but also within sector horizontal, adding value within sector, or vertically moving beyond just farming, for example, and be able to enter into other sectors that we know about, more agriculture, fisheries, on tourism, and like those are the areas. But mining, you can do a little bit much more there. See, a little bit more there. You must ensure that the resources in the mining sector are properly harnessed. It's harnessed to be able to bring value on the trade. We'll talk about other strategies when I get to the next discussions.
So, Mr. Stano, so you've heard all the different things government is doing to help us recover and make sure we weather the storm through this challenging period, making sure we have essential commodities in country, providing safety net, maintaining priority expenditures, while also managing debt and making sure that our public financial management is prudent. But of course, government cannot do everything by itself. We need private sector support. So what can government do to support SMEs so that they'll be able to be strengthened to complement some of these interventions that government is rolling out?
So there are many of constraints that the SME in accessing finance. One critical one when I listen to the report, we indicated, remember when the World Bank spoke to SMEs, 70% of the economy. Out 90% of that 70% are still informal. So informality is stopping census to satisfy when I was very small, I used to sit with my grandfather. He tells me that there was an analogy. He said, you can effecting this from the veranda room, you should be outside. I never knew about that. So if people are operating in informal sector, meaning they are operating covert, they are not registered, so if they constitute the vast majority, that is a major constraint. So informality needs to be overcome. How can we do that? There is talk of one-stop shop for business registration. We need to facilitate that. Make sure that they happen speedily. For us, those set of people still in that informal sector find it very, very difficult to access. Yeah, business operation. Second, even those that are formal, largely require civilian problem. Thankfully, the Bank of Australia has come up with registry. How many of our financial service providers are willing to accept, for example, the moving was they always ask for moving landed property. Even though we are engaging commercial banks, microfinance institutions, and community banks to assist the SMEs in accepting these moving ones, some are very wrong. For example, the MFIs, community banks will tell you they have problem of identification. So it is only one, maybe the Bank of Australia, probably the national registration, will come together to solve that issue of identification. This set of people will still using the one. So the collateral registry is good. Some of the commercial banks accept it, movable assets, as long as the assets are registered with the Bank of Australia. It's providing some form of comfort and confidence on the part of the tenants. But we should do more. Thirdly, interest rates. Of course, I spoke about when I was talking about the upstate things, not set of specific loan portfolios without constraints. But largely, most of the SMEs lack the basic skills and experience to even manage their own business. For example, the providers of funds are looking for attractive business models through business plans that they can form. But sometimes somebody takes a business plan to these people. Simple question from your own business plan, you cannot answer, which means many of our SMEs, they are not able to write it for themselves, so they go to people they write it. But what they do is maybe carbon copy from somebody's own business. And not all businesses are the same. So this is why I see that we are very much aware of the need to capacitate our SMEs, providing various business development schemes, either through private sector or institutional media service providers. If you ask for the economy diversification programs, there's also support mechanism on that which we are supporting jointly emerging business development service providers to train them so that they can afford and scale the SMEs in these business development schemes. Also, we are talking about how information can flow to the SMEs, sending that information to financial services. This is why, as Mida we have said, we should think about how we can work, and thank God we are working. It's about time, shortly they will go into it well, launch the financial services and send our business people what kind of financing mechanisms available in that, how you can access based on the various stages of your business development stage you are considering the business development. So that was something very significant. And lastly, one thing that came out of the report was coordination. No data on SME support, etc. Yes, I agree. Last year, as leader, we thought it was that the SME coordination should be paramount. We brought together various stakeholders in a 2 days workshop. And we map out strategies, how we can continue in that direction so that the various interventions coming for SME can be tracked in report form so that any given point in time somebody wants to know what is happening in that scale.
those pieces of information. I think moderator is helping me. Thank you very much.
So thank you so much, Mr. Sano. We've heard about what some of the things we need to help the SMEs with, working around formalization, working around making sure that the financial institutions do actually work with the collateral registry, and how we can work together to improve on identification, dealing with interest rates, and help supporting these SMEs with business development services, and also information on how to access finance and how we can better coordinate the SMEs themselves. So, Mr. Idris, what are your own proposals in how government should develop policies or programs that can support SMEs?
They're not specific actions, but two principles. One is thinking outside the box and be ready to listen to other solutions that do not necessarily come from EU program or World Bank program or solutions like the example of the business plan protocol. When you work for big institutions, their approach to engaging countries based on a fairly standard way of carrying out things. Only the amount of time we have to engage in, whether it's foreign negotiation or country strategy development. 11 days people come ask questions, put up a set of recommendations. We should be correct from a professional. But coming up with that, how do you? Those will require really customized, specific solutions that are born out of people's understanding of what's going on, what can work, and what cannot work. And most likely, those solutions can be enriched if you engage with people who are already doing it, not people who are waiting for an advertisement of national digital transformation project to do this particular activity, and you kind of, there are people who have been using their sweat, their blood to do stuff who have solutions. But most likely all of those things will not go into coming up. So my first thing is, let's be ready as policymakers, as decision makers, to think outside the box of what is in the matrix activity 1.1 component 2 in coming up with workable solutions. In this room, there are people who have set up flower factories, we say cooking shop, rice importation, bread production, flour. Somebody says we can use cassava to make flour. And that person is not known by anyone, from banking sector to this to that. They're basically struggling, running around, hopefully not to die in real. So their views matter in all of this. So we have to be proactive about that. Second, just engage. It leads to the first one. Just engage. So understand, the higher you go up in government or country like World Bank, you have lots of meetings, things you go. But if the theory that the engine for growth is the private sector, and we all know that the 70% of the 90% or the 90% of the 70% are basically operating in the release stage. It's not hard to want 5 million here, small grants, 10 million euros there. These are on the vulnerable sector you're trying to safety net. That's the safety net approach to the private sector development. But the all 1% or 0.5% who have the ability to take those 50,000 SMEs and create a supply and value chain backward linkage to them. If you talk to them, they might come up with solutions. So just make time. Talk to people. If I know that I can gather 3-4 people who are in the, not that one to talk to governor every month. Governor has a private sector roundtable. Not this kind of workshop. We come, we talk, we go. But I get 45 minutes a month for governor, for minister of finance, for financial secretary, for this, for that, agricultural minister, just to share our own ideas and help. So my only advice is, please engage and you will find solutions.
So we've heard from the private sector advocates and the private sector advocate on my left, Governor and Honorable Minister. We have proposals for what we should do around supporting SMEs, access to finance, business development services, how we should make sure that the national switch has actual impact at the last mile. And we've had what we ourselves are doing at Central Bank and Central Ministry of Finance. So I guess on your final note, we all know the crisis is still on, and everyone wants to know how well we'll weather the storm, how strong we'll emerge at the end of the tunnel, and how prepared we are to make sure that we don't drown. So your final question is, how can government attain strong economic recovery in a shock-prone world, from the monetary policy side and from the fiscal policy and wider PFM management side? So I'll have Governor go first, and then the Minister of Finance.
Please, you have to forgive me. I need to make a correction. National switch in the facility. To be fair to the World Bank as well, but they can speak for themselves. The National Switch project, if you read it, it's a national financial inclusion project. If you read it carefully, the document is publicly available. It goes down to the very minimum that you require. It is a project that was a very small value payment. One of the things actually we're introducing the National Switch project is the QR code system, where the informal sector, we brought to the formal sector, you to buy cassava in the market. The merchant in the market has a QR code. You use your phone, you swipe, you pay. And then by using that QR code system, they will come into the formal system, the whole bank account or the whole mobile money account. There's going to be interoperability between mobile accounts, all that. So there's so much going on there. I wouldn't have the time to explain all of it. The cultural facility, again, money is not free. You have, with all the best will in the world, for you to access it, there are certain basic things that you need to meet. First, we need some form of collateral. Otherwise, we don't call it an agricultural finance scheme. Let's call it a charitable scheme. Second, it was designed based on the government's input voucher scheme. So you've got to be part of that input voucher scheme to benefit, because the government have budgeted and you will get from that budget the whole front load cost for you. So there's more to it than meets the eye. So I thought I should clarify those two very important points. Now I'm growing. How do we grow? Goodness me. Tough question. Very tough question. There's lots of things that we've done. Policy will always be accommodating, policy will always be supporting. The Bank of Sierra Leone has a very unique position whereby the law required to support the economic program of the government. It's in the law of the Bank of Sierra Leone 2019. So I don't do anything that would be counter-cyclical or be counter to the growth and aspiration of the government. So I intend to stick to the law and executing my mandate. So monetary policy will be fully cognizant, supporting the cognizant of the growth aspiration of government. Thank you very much.
So the bank said, monetary policy will be fully cognizant of what?
Yes, the cognizant of our aspirations. Very difficult question to answer. But I think in the discussions we have been having, and I think it's not the government, right from the onset, set the stage for growth aspirations in the national development. And there are very good thoughts that are put into how we should be thinking through or weaving through challenges that we are confronted with. So, and we've been calibrating it, right? So, so when we say shock prone, I'm saying it's like we're in a permanent shock environment. So it requires us to have a think on doing things not business as usual, thinking kind of outside the box, as has been said here. Certainly, what we've been saying is, as this growth has been vacillating in the country, right? So we grew at a point at 20%, and another time we were shocked. You go negative 20, 21, and then you rebound again, and then you have another shock. So this is how the pattern has been for the last decade or so. And so what that means, and we're saying, why is that the case? Most of the narrative said you've been hinging too much on the mining sector. So when things go bad in the international markets, or the current type of companies you have here, it eats badly on your projections, it eats badly on the economy. So that doesn't mean the mining sector is not relevant. You must do as much as it's possible to get it right in the mining sector. But that's the foundational endowment that we have. So we can't let that go. Many other countries in the world, in my view, they have mines, they are primary producing economies, and they have it right with it by doing what? Optimizing what is in the mining sector. Mining sector revenues have to be optimized. In what way? In the current structure, our PFM Act provides for us to ensure that we have a system in place that allows for transformational development fund structure. It's not operationalized. It's something Minister we should think about. Because I think once you set up that structure, because the sector is set up in a way, the government issues out contracts, the NMA does what? Supervises it. And then we only use the fiscal regime to get what we get. Except for one of the mines that we have free carried interest in the mines. So within that structure, you create the institutional architecture to start harnessing the revenue potential from within the mining sector. So that's one way to go through it. By so doing, any mines that you are setting up, once you have set up that structure, if you set an SPV on the mining sector, you feed the mine, you know what you have, that's one, you feed the asset into it. That asset starts having value that you bring back. That's why you start feeding that. So that's why. You optimize that, but that's not enough because you're still not diversified. So you have to vertically diversify, like I was saying before. So, for example, let's take the agricultural sector. For example. There's a lot that can happen there. In the agricultural sector, in my view, few thoughts that do come to mind. Maybe we're not incentivizing our farmers enough. That's generally something that we'll be discussing. If they are producing rice, and rice, we give up rice imports, taxation on GST on rice is 15%. It's zero in the country. Think about it the reverse way. But this cannot pass the political tests in certain times because they will think that if you start imposing it, given the timing of it, it might be that it increases the price of rice. Well, maybe the tax that you're imposing on rice, however little is that, you can put it into the fund and incentivize our farmers with something very, very predictable. Okay, so that's something that we can think about, and those are things we are discussing at our level. But it's the timing. When do you do this? Okay, so that's one way to diversify. But you can even diversify across the line of three crops. How do you ensure that the farmers themselves can actually start earning income on their own? Three crops is money trees. But money trees, we invest in money trees in a year, which means enhanced seeds that they are having right now, maybe for cocoa, for example. In 3 years, you start earning, but we have actually grown sizable portion. I know people is thinking through engaging with us on ensuring that our farmers do plant money trees, and those money trees sizable scale, and in that way, we start enhancing income for themselves over time. It's as a way to actually diversify sources of easing the pressure of the economy. But beyond that, there are sectors that we've been working with partners that are in us. Issues, there are a lot of active discussion around harnessing these resources. These are also sources of bringing value on the treasury in the shock-prone environment. Just additional ways of exporting and having earning foreign exchange that can ease the pressure on us. I will not, let me just point on the last point here around diversification, because the way you're going to have the enablers funded is by the means of resources that you bring on the treasury. On carbon credits, I have been saying this thing passionately internationally. So the narrative around carbon discussions, I thought that we don't pollute, but we take all the brunt of climate pollution or ozone depletion emissions by several other parts of the world. So the narrative that we want to start having, even from theory that we are discussing with our partners, that we have a very huge green cover, whether by our forest reserves or our green forests themselves that are out there, not reserves, but also macros. These are carbon sinks. What are they doing? If you fly across Sierra Leone, most of the places not developed is green. What is it doing? It's actually taking the emission from the rest of the world. We are absorbing those. Now, what is happening in the world now is those assets are actually audited. They are audited, certified, listed, and they are actually determined as credits, and those credits are offset by people who are international producers. But they are under, like in countries where the jurisdiction is very solid, we need to set up the structure to ensure that we are participating in that market. It's another way of just opening. So in a strong environment, for you to be able to ensure that you invest in the enablers and facilitate you promoting the digital investments, or even say renewable investment. It is about ensuring that the treasury is able to mobilize from many sources to be able to support those investments. So let me just start. It's not an easy answer because modeling through each of these things that I've spoken about takes a lot of time and a lot of policy thinking through in the life, right? So not easy to do, but it's things that we must do. Thank you.
So we've all heard from our panelists, especially from the private sector, the Bank of Sierra Leone, and the Ministry of Finance. And we know that government is working, and it's not only working, but thinking and trying to think outside the box to come up with innovative ways to see how we can weather the storm as we're in a shock-prone environment. So I'll now pass on to the audience for 4 questions, and I mean questions, not contributions. If you have contributions, I'm sure we all have notepads on our table, so you can jot them down and we'll take those. But we just have time for 4 questions. So can we see the hands, please? I need to see all 4 hands so we know exactly who the 4 people are. Not yet selected. So we have 2 on this side, the gentleman right at the back and the gentleman next to Mr. Robin Coker. 2 on this side. We have the FS and the gentleman next to you. So those are the 4. Yes. FS, I hope it's a question.
I just want to commend the bank for excellent report. It's one of the few $6.3 because revenue GDP can't stable because COVID and now we are seeing in Russia crisis and as measures, some actions and activities to be part of this. I would like to see ministers spoken, ministers have spoken to see, to say that it's an excellent report. There is time for the bank to also share it. Progress is being only. Thank you very much.
Good afternoon. Okay, I was Leone. Start. Actually, it's a combination of question and a contribution as well. I want to know what the government can do to make agriculture more attractive. What am I producing that? Or is it when we came this morning, the first thing we did was what we got a breakfast. Without a breakfast, some of us would sleep. Food is very much important. Agriculture, it's to my own opinion, and what's really happening in reality is that It's meant for women's mentality and you know, it's like okay, agriculture is meant for all people. In school, the give you what to do in the agri sector if you're different. Like if you do something, you take it to the agricultural farm as punishment. I can't remember before every day last year to take me to the agricultural field. And guess what? With this, I actually learned a lot from that practical field. And today, it's taking me a long way since I decided to move my career in the agricultural sector. So we don't actually see agriculture as something sexy, as something a good career I made in this country. So let the government do to actually make agriculture not just for all people, graduates from February College, for graduates for JAI and other universities as well. Thank you.
Good afternoon. My name is Wally Assoum. I would like to appreciate the World Bank Finance for very good. I would like to ask, touching on Ifri's comments earlier, that 100 million loans was provided for the agriculture sector, of which only 20-something billion was utilized, and the balance is sitting in the banks. Was that not thought about before? The $100 billion loans just come out of the blue and be provided. Why was not some of that amount being put for manufacturing to help industries? Because industries are as well priority. So this is my question to Bank of Sierra Leone. And if it's possible to consider industries. Thank you.
Thank you. My name is Andrew Musa. I work for. I have a quick question that I often wonder about when I relate to original goal of the Ghana University many years ago. The intention was to raise a very dynamic population of young agriculturists that will fill that space that we are now struggling. And over in many decades, Ghana and other institutions have turned out hundreds, if not thousands, of young agriculturists who are parading the streets of the cities looking for jobs. But in the other area as well, they were exposed to entrepreneurial training. And there is literature, abundant literature, suggesting that people that have had entrepreneurial trainings at an institutional level are more likely to succeed with entrepreneurship. For over the years, Sierra Leone's focus has been more on the small farmer, who have struggled with for many, many decades, and they are still trapped in that. They are still trapped in a number of the constraints that we are struggling with in this country. So my question is, what are we doing as a country to transform that landscape and ensure that our young agriculturists are given the opportunity to actually get into that sector and revolutionize the agricultural sector that we now struggle with? I say this because my dissertation focus on exploring the entrepreneurial potentials of young graduates, and that information there is rich. So, again, my final question is, what do we now do at this time to see struggle with food insecurity and many of the diversification questions that we have raised here? What are we doing with the population? And they are ready, they are job ready, they have the skills, but they don't have the requisite inputs to engage in the skill. Thank you.
Also, the last speaker, it says that you are the head of a whole government agency. It's supposed to fine-tune putting forward. So you tell us, what are you doing to split that focus so that they become high quality? Thank you. Well, agriculture is the mainstay of the economy. People employed in terms of huge potential, but also provide livelihood. So your question is very relevant, it's pertinent. I believe agriculture is a private business. But in this country, what we've been doing in agriculture, I think we've been trying to do it like a public sector business. So there has been a shift in the way we are approaching it under the current government, where we're trying to bring in private sector participation into ensuring that farmers do have access really freely, and that's so mature over time. For one, because for you to be able to farm, you need to have access to resources. It could be your input, it could be your access. An example. If a farmer has access to finance and he needs fertilizer, and the fertilizer is available through a private market, it's even less. But if he relying on government to bring it at the end of the year, it does not come in time, and the season passes, it's frustrating. Okay, so I think, in my view, we must ensure that the private sector is incentivized enough to involve in agriculture. That's one. Okay, incentivize them enough by providing the relevant things. In several countries in the world, agriculture is partly subsidized, but you're subsidizing private people to involve in agriculture, whether in Europe or even in North America. Now, the issue is the matter of scale. Somebody was talking about we are still doing this at a rudimentary level. In some instances, you really need to choose winners, even the private players who are able to play at scale and support them. And then you build up nucleus around them. And so that's another way to think about it, but that's very deliberate. It is not cheap. It is not cheap to do, it is costly to do, and you have to imbibe all the discipline to be able to ensure that you stay on the farm to deliver it. But the inputs have to be provided. In my view, I'm not an agriculturist. I'm talking from the point of view of policies to incentivize the growth of a given sector. That is the mainstay. So, to set up institutional architecture, we don't have in Sierra Leone a bank to finance agriculture. It's not there, for example. So farmers don't have well-structured, made institutional infrastructure that provides the finances that understands the cycle of that particular business of different types. So like rice farming, for example, or perennial crops, it's a 1-year cycle turnaround things. You cannot have somebody go and take a loan in the bank, like our commercial banks, to go and do a 1-year cycle turnaround rice production or say vegetable production. I don't know how they are going to manage it when the bank is going to be at your back at a 30% at interest rates to be paid within the year, within the next month when you are taking that money. So you need to have, of course, the financial institutions set up around that who understand the value chain in that sector and are able to provide the incentives
for you, or access to the input for you to be able to do that business. In the government right now, we've set up a whole fund for agricultural financing. We're trying to ensure that we put seed money into that and start having that structure, providing kind of incentives or inputs for farmers. But generally, what we're doing for government, whether it's for seedlings, for access to machines, for access to fertilizer, this we have allowed the private sector to be able to play that game and ensure that our farmers have access to inputs. These are things you can do as some recovery of the cost, because everything agriculture you recoup it again and then you replant. So these are things that we need to think through very deeply. But these are just some of my thoughts. I'm not an expert in the field, but some of the things that I have.
So, Mr. Sono, how can we support students that have entrepreneurship and agriculture training to be more productive in that field?
Okay, thank you very much. I think the reason for introducing entrepreneurship courses came as a result of the realization that one policymakers or review that any university is a necessary condition for us to achieve jobs. So, you becoming an entrepreneur student, we are hopeful that you become a job creator, not a job seeker. So my question, rather than ask the question, is students in training, they impact entrepreneurs? Are they able to look at society, identify problems, and develop use? For example, at the moment, the EU Salon opportunity is about implementing €8 billion project targeting 4 value chains, all agriculture: cocoa, cassava, palm oil, vegetables. There are grant mechanisms for them. Additional trading. Or they can't sit at home and people come and now they will soon open business plan competition. Will they be able to prepare convincing business plan and enter into the competition? It's not that the opportunities are not there, they are there. So it is not only the government that put this idea into their heads, they are educated enough not to be able to go idea development, source funding, how their business actualize. So that's what I think.
Governor is going to respond to the question about the options like that.
Thank you, it's a good question. The Central Bank of Washington can only do so much. The government's facility, the importation of essential commodities. When the Ukraine war broke, we've done a special facility for fuel, we've done another special facility for food. We haven't practically gone into the violin industry, might take quite a bit, but it's something that we'll consider, not us on our own, I believe, because, remember, the mandate of the central bank is monetary stability, in bracket price stability, and financial system stability, including maintaining an effective payment system architecture. But I think it's a good question, but it may require further thinking, try to guess how we revive industry. Because just to think off the cuff, what sort of short, because these are short-term measures, right? But the rest impending challenges. But yours is much more, or the industry is much more fundamental and deep-rooted because it has gone silent over 30 years. How do we fix it? That's where the minister comes in and his colleagues. Thank you. Thank you, sir.
So thank you to the panelists. Thank you, everyone. We've heard about what government is doing from Ministry of Finance to Bank of SLEU. We've heard what CIDA is doing. We've heard what the private sector is doing. And also what thinking is all going to make sure that we all stay safe in terms of how the economy is faring on, and that we all need to continue engaging and thinking outside the box to make sure that all these thoughts, all these programs, and all these different things that we want to see happen to scale up each one. At this point, I'd like to say thank you, and I hand you over to Mr. Bola.
Thank you so much, Dr. Ekam. Once again, a huge round of applause to our panelists. Thank you, everyone. I would like to take this opportunity to thank the Honorable Minister of Finance, the Deputy Governor of the Bank of Leone, Honorable Minister of Lands, President, Finance Secretary, the Minister of Finance, colleagues from the development partners are present, heads of agencies, ladies and gentlemen. It's been a fascinating morning, so to say, towards the afternoon. It's been very engaging, very provocative, but also insightful, as you've seen. I think we've all learned something, right? Which I think is very helpful for us to see how we continue to contribute to the policy discourse. I would like to make a few concluding remarks on behalf of my colleagues. I would also request my IT teams to upload the link to the report. Let me change it. Thank you. I would like to request my colleague from my team to upload the link to the report. We have to download the report. All of you have participated in today's event. We have your email address and sharing a hard copy of the report. You are also welcome to download the soft copy on that page. If you follow the Twitter, the Facebook, and the online platform, our EXT officer, Moses Kabgo, will also be able to post the link of the report so you're able to access it. It's been a fascinating morning leading into the afternoon. And for some of us keeping us seated for so long, Honorable Minister of Finance, you can tell what this really means for Sierra Leone and for Sierra Leoneans. So once again, thanks everybody for coming. And just in terms of a few concluding remarks from my end. One, Idris mentioned that we need to be outside the box, listen and engage, and above all, do things differently. I like it actually. I thrive most is through disruptions and actually challenging the status quo. And I must tell you, Idris and others connected, that the World Bank is listening, so are other development agencies. We are adopting, and the key point you rightly mentioned is about engage, stakeholder engagement. It's critical. And I think it is through this kind of platforms and many more others as we do that we really try to make sure we get to understand what's going on and better be able to design projects or interventions that are respond. One thing I wanted also to highlight to respond to some of the points raised here is, whereas we may be speaking of a specific project, in totality, we do have a portfolio that is integrated and one thing speaks to the next, speaks to the next. All right? For example, on the issue of food security self-sufficiency, we do have a project which is $60 million under preparation, where a bigger bulk of the resources will actually be helping us to think through how we navigate from smallholder agriculture farmers towards the next level that has been mentioned, right? On the challenging question of why are we not seeing many people participating in agriculture, I would actually say probably that is an anecdotal evidence. We need much to see how that holds. But there are examples we see. If you go to Makeni, my famous example now is the gentleman, the owner of Leone Mountain Rice, right? If you go there, you'll find over 10 young graduates, okay? You'll find a young man who is on the production line. He has a degree, but he's rolling his sleeves. You'll find 4 or 5 young girls who are interning at Njala and Makeni University. They are on the production floor. So the message is, you can go to school, but are you willing to roll your sleeves? And this is the message we want to push. You get it? And this is just one of the few examples I can go on and on to share with you. But back to the point of thinking through this in the portfolio, is that the national switch will provide the infrastructure. But if you follow closely, the concluding remarks by Siegfried mentioned financial sector inclusion phase 2, which is actually looking at most or many of the constraints we've been identifying through the SMEs here. That project is under preparation now. Then you think about the digital transformation project, which is going to the board next month. And I will not go through the entire portfolio for the sake of interest, for the sake of time, but I just want to end on one critical constraint that we know is a binding one for growth and poverty reduction, which is electricity. And we are right now thinking through how do you transition towards cleaner sources of energy by embracing solar. Okay? And we are working with the government on an emergency solar project in the amount of $75 million that will generate 45 megawatts plus storage of solar. This will go towards transitioning away from power, therefore minimize outages. So in a nutshell, I just wanted to say that whereas we may be thinking of a project, the way we are looking at the way we work is a portfolio of how interventions are interrelated to one another. So we are heading for lunch. I'm told lunch is on the the top floor. Yeah? Lunch is on the 5th floor of the hotel building just across. And will be guided by our colleagues here. But once again, I just wanted to emphasize that we are listening, and this is a good platform. I must say, it has been a wonderful 2022 launch of the economic update, and we did not make a wrong choice. We made the right choice to choose the topic of leveraging SME, financial, and digital platform. So, ladies and gentlemen, this brings us to the end of the launch, and please join us for lunch. Thank you very much. Inshallah.
Darling at the reporting site. Email. No, no, I tried to do remember what I don't know. It's our left. One you screenshot. So you email and send this Sarah economic. Screenshot this for me. That Ghana side. Correct us. Correct immediately. Okay, the website, okay, I wonder what I. No, the website are different. That link, another same link. Hello? Hello? Yeah, Ivan, they call you. Okay, no problem. Okay.